All right, good afternoon. And today is September 16, 2023, and we're gonna do a review, end of day review for today. What I did today, the market have a brilliant move, surprise everyone. It moving down, right? It's amazing that how the market move. Okay, let's look at the 1 hour time frame. Wow, you can see that on Wednesday, when the CPI release, you see it keep moving up. But now in the hand side, we look at the way it move. It's so resistant right there. It's very high resistance equilibrium right there. See, like that. The candle is not really big body candle. It's a very weak candle right there. Now that give us some idea that all of this move up is just a trap. Drop all the sell side liquidity right here, and then boom, it went down. It take them all from the Wednesday low, right? Yeah, it take all down from Wednesday low. That's amazing right there. Just pause for a moment and thinking, and you see the huge down move right after the market yesterday. That means the Thursday is a last buy sell activity sweep before it moved out heavily on Friday right there. So basically we need to do more research, more document on this so we can identify the Friday sell-off pattern right there. Right. Or you can look at this chart and you can see that Thursday is the high of the week. So basically you can say that Thursday is a reversal day, right? Reversal in the sense that it's gonna reverse back down. Yep, that put that into our daily profile right there. So we have this profile today. So it's September 15, 23. And the idea is that weekly profile rate. So we call this a Thursday reversal. I think ACC also have the Thursday reversal profile. Give me a second, I can pull out the setup. Yeah, give me a second, I grabbed something real quick so I can show that there is somewhere I remember that I saw that pattern right here. Just give me 30 seconds. I will pull it out and I can put on the screen and we all can see that. I'm working on that right now. let me, okay, all right, let me open the email. And remember, today is a very huge Friday also, because it's the they call quadro witching, which is the option expiration day for the quarter, not only for the month but for the quarter Q3 of this year. So it's very huge. We look all right, here's the weekly profile that I think we can fall back on. Okay, so you see that the Thursday reversal, wow, man, exactly. Look at that, amazing. You see the Monday, the Tuesday, and the Thursday rally, and the Monday rally, boom. Friday show up. So consolidation from Monday to Wednesday, price run into week high, and then form market reversal. Anticipate, identify high time frame premium array when market fell to rate into it. If it occur at Thursday, the odds of probability that Thursday gonna be see a drive high on the market. Trial news like OMC, in this case I think it's CPI. I don't understand why the author of this don't put it in. His author, you can follow her on Twitter. I see the author of this chart don't put in the CPI, but it perfect work for the CPI today. You see that? Here's this pattern, man, amazing. Look at the charts again. Where our chart, 1 hour. No, that's a weekly. Come on. Where is my 1 hour chart? Okay, right here. So it's play out so perfectly for the Thursday reversal pattern right here. Right, we have Monday, moving down, Tuesday moving down. No, I mean right here. I think I look at the wrong week. I look at the prior week, but here's this week, right? Here we start right here from Monday. You see, Monday. Oh man, look at that! Exactly right here. You see that? Right? Monday, up. Tuesday, yeah, Tuesday up right there, and then down on Wednesday. Exactly, down Wednesday, and then all of a sudden it rally. Amazing. You see, rally all the way up, and then it start dropping in the pre-market, and then boom, over, and it go all the way down. Wow. So that's the huge lesson learned for us. We completely forgot about the weekly profile. We so caught up into other other things that we forgot the whole week perspective. So that's the thing that we need to pay attention from now on. That we need, because we only trade, we try to take only one trade a week, right? So that means we have a lot of patience, a lot of time to choose a very good and high set of trade. That means the market's, weekly profile will be a very good, guidance for us. So right here, note the price can run to high of the week on Tuesday London open. No, I mean right here. Okay, that's the note right there. Consolidate on from Monday to Wednesday. So yeah, you can see that the Monday right here and the Wednesday right here is consolidated right there. This the error that consolidated. This error. Boom boom. You see this error right here. And let me mark it so you can see it. Yeah, so the error, some reason you see is consolidated that. Monday go up a little bit, then go down. So this is like a magnet right there. It's a central price, error for some reason. And then it go up there and then go down, retest and boom, it break through that on Thursday. But as soon as it make a week high, you see, as soon as close 2 cents above the prior week high right there, it rate the buy side really, then boom, you see the huge drop right there. And this morning when I see the candle, a very we see this candle, we intimately, instantly we saw there's a bearish signal right there. I mean, that's our instant right there, but we didn't capitalize on that. We don't have the experience, we don't have the conviction. But next time when we saw that, we will do it. But because it's not in our most memory muscle, yes, muscle memory. That's what I mean. But as we compare the note about Thursday profile and the way the liquidity run play out today, it perfectly fit into this Thursday reversal. So next time we will take full advantage of this setup if it's happen again. Look at right here, you don't see much, but if you look at the 4 hour, you can see that a bearish candle. I mean, it depends on, right? If you look right here, you see, oh wow, this is auto block for people who want to short, and you see that means the market maker or the big money or spot money, they know whenever they see this signal that they will go in and short all the way to take the buy side liquidity right here from last Friday. Okay, let's look at the 4 hour time frame right here. Let's open the 4 hour time frame. Okay, here's the 4 hour time frame. Okay, so we see it's the very dark close candle with a long wick right there. So it tell you something is special, very unusual. And you can see right here auto block, right? Huge displacement down, and then create a fair value gap, and there's a retest, and boom, it went down, it fell. So next time we should take the trade at open right away and put our stop loss at this level right there. Like early in the morning I show you the option right there. We buy the put option is for $1, but it go up to $4. That's huge. Maybe go up to $5 at one time. Wow, $6, come on. You believe that? Yeah. If we go in and buy the put option right here, you see. So if we buy in pre-market, I don't think they allow you to buy pre-market, but went right at the open right here. 9:30. The one about $2, and then you get $6. You make about $2. I mean $4 right there. So one contract you make, you know, $4. That means you make $400 for one contract. So if you scale it, you can make 4,000, 400,000, 4 million. That's how smart money people make ton of money right there. But anyway, we're on our road there. We are in our journey to get there. Basically, I say that, you know, when this morning we see this candle, it tells us something special, something. And now we know the something is that it's going to be sell off heavily. And it fit into our, you know, weekly profile. Thursday make the high of the week, and then boom, sell up. And we did see that yesterday, right? We see that the rate, the buy side activity this morning, when we are let go back to the note we have. Yeah, when we did reviews yesterday, so here the setup that we are come with. All right, we give it a name called Thursday as Glow short setup. So basically we look and is right. So how do we know that the Thursday we went down? Because look right here on the weekly. Okay, I think let me go back to the internet browser. Okay. Okay, so in the weekly, right, we observe, we see that it opened right in the mid range of the prior week, and then on Thursday it all go all the way up and the 2 cents above this right here, right, 408 to 2 cents above 46 later. So that's definitely a fit into that definition of buy sell liquidity rate right there. It doesn't mean that the market structure shift, right? It means it's rate liquidity in order to reset and go to the sell program, which is gonna come down. So our game plan is buy short the stock or buy put option on Thursday right away when it make the high of the week. And in order to see detail, then we go to the 1 minute and we can see the detail, how it's play out, how the liquidity rate is taking place. You see that right there? Around, I think 1, right? This is 12, 13, 12. So it's about 3:12 p.m. and 1, 2, 3, 4, 5. So 5 minutes after that, 5 minutes before that, it make the high of the week. That means at 15:07, right? So the 13 hour gives you a lot of clue. So you better watch for the 13 hour. Yeah, we need to put that in our note. Time of interest rate, we call time of interest, which is the 13 hour. Carefully watching to identify the liquidity rate for a signal to go short or long, right? If will be the opposite, the reverse for long. That beautiful lesson part right there. What else we want to say? Yeah, and yeah, that's mean. And then we see the displacement photograph and retest, so we know this setup is there. Then going and short them or buy an option and hold overnight, because for whoever long, because it trap a lot of buy side, sell side liquidity, and the people or smart money or market maker, they run off the algorithm to grab all the buy side liquidity. Then up here no one buy it, then the price start falling, and it's fall in the pre-market. So if anyone go long, they will incur in a big lot right there. It's very hard for them to it's very hard for them to get out their position. Basically, they are in a huge loss. I mean, look at that. How do you this move to this move from the open, right? You see, let's say from top right here, whoever buy they there before the market's open, they already lost how much? Let's say it's open here, right? It gives a little bit retracement for you to get out. If you don't get out, then you get toast right there. Look, so basically before the market's open, they already lost $2.76 right there. So you see, whoever got bought into this, all the sell side liquidity right here, trap, boom, right there. I mean, before the market opened, they already lost in a huge amount of money right there. He lost $2.76. So if they do the call option, they're in huge big trouble right there. And then after markets open, they will have another huge loss if they don't exit the position. They say, oh, I want to hold on reason to see if it can retracement. It do not. It don't believe you at all. It run down another $4, 68, almost $5. That's amazing how the quality were trap and run. The more we have, the more knowledge or the understand we have about liquidity, the better picture we have in our mind how why it run the way it run, how the price move the way it move, because all about liquidity or transaction, right? The premise we have is that the markets move to maximize the transaction, or in other way, maximize liquidity. It run to get liquidity. Where there are huge pool of liquidity, that's where the algo gonna go and capture the liquidity, because it trigger the people order, right? Just look at this order. I know all the people buy into here. They put their stop loss down here, stop loss down here, stop loss down here, right? So that means it build up the huge buy side liquidity right there. And then right here, it build right here. You see, it just take this buy side liquidity, the last rate buy side liquidity. A lot of people short right here, right? As soon as it rate this buy side liquidity right here, yeah, just exactly this level last week. Then it's moving down very quickly. All right, go back to the one. I think we have another 3 minutes. So I want to go back to the 1 minute, and there are a huge trade opportunity, and we kind of mix this, Okay, so we have this resistance level. Okay, where that resistance come from? Hold on. Is that from 5-minute time frame? I want to see where we draw that level from what time frames, so we can go back to reference that. I think maybe on 1 hour. Is that right? Yes, on 1 hour. Okay, then go back to 1 hour to see why. And I think I did mention this morning, but for some reason we do not have a we gun shy. We cannot pull a trigger. That's the thing we're not working on. So basically that's level right there, the support level right there. Okay, no, this is support level. Okay, this level is we see the magnet right there, magnet level, or right level. Yeah. Hold on. No, right here, this level right here. So this is a bullish order block, right? It's a swing high, price swing high, and it have failure gap in there, and then it retests, and then boom, it go up, and when it coming down at open, and we look at that on a 1 minute time frame, we see that it break through there. So it gives us an idea that it's gonna continue break down, but for some reason at that moment we thought that, well, maybe it's not gonna break it. But if you look carefully, as soon as it break it down, it make the retracement, but after that you see it have huge displacement and it give you the follow up right there, and this a retest. So we have two setup right here. You have order block follow up retest, and also you have a bearish breaker follow up retest. We should have going right here, and we failed to do that. That's the thing that we need to go home and on a weekend to contemplate and do the lesson learned for this trade setup right here. But anyway, let's jot it down. And another thing, we hesitant because it's let's say you have an order block, fellow gap, order block, fellow gap. Yes, we see the buy sell liquidity was taken right there, and we don't. Yeah, we can trick right here. Sell liquidity was trapped right there, but right here it's not much. So we kind of hesitant right there. It not meet our requirement. But if you look carefully, you see that the little detail right there. But also it's in the down move, the huge down move. So whenever you see in the huge down move, you know that the market's in a sales program. So whenever the retracement right here, the test right there, it's the time for you to go in and short them. Don't hesitate. So that's the lesson we learned. Basically, we have order block, fair value gap, retest, right? And also we have the bearish breaker at the same time. Fair value gap, retest. So we have two set of this confluent right there. Look at this order block, right? A closed candle, and you have a displacement and a retest. And if we treat it a swing low, excuse me, my voice kind of get a bit cracking right now. I will try to finish this, so get some water. Okay, so we have buy side liquidity were taken. You see right here, it's very tiny right there. Or basically rate, let's say that, and sell category were trapped. You see right there. I tried to look right here, but I see it's taken and not trapped, so I kind of hesitant. I thought it's gonna be I want a low quality setup because the sell side liquidity trap is not so clear. But now we look back, we see that's a huge down move for us right there. And we also pay attention that one more thing. We can say that sometimes we don't see this condition, but if we see the condition that so-called trend follower, it will be equivalent to this condition. So whenever we see the condition is absent, because that's a condition for us, but we can see the trend follower, in this case is a huge trend down, right? If we look at the 1 hour time frame or 4 hour time frame for that matter, you see it's a huge downtrend from the close to at this point. So we know that the market is already set in a sell program, and the setup right this is perfect for us to go in. There's no hesitation right there, even though we see the absence of this condition. So that's the new knowledge to us right there. Okay, what else? Here we have an entry, entry time. Yeah, so whenever we want to follow the trend, the retracement, the first test, the test, and the retest, or sometimes we call for the first set right there, it always happen about on the first 5 minutes. And if you don't go in the first 5 minutes, you will miss the huge down move right there. So that's the huge lesson for it also. So we can say that an entry only happen in the, actually, you know, right there you can also take the entry when it retests here also. But when it happens in real time, we thought it's going to be multi-structure shift, you see. But in this case, not. It's just a cell select pivot trap again and run down. Because it needs the cell select pivot trap in order to go down. You need to wrap them. You don't want to continue to go down, right? That means it's not efficient. The efficient for market is go down and then retracement, go down and retracement. It cannot go, you know, just keep going down. That's not efficiency. The efficiency requires the algorithm to maximize the profits or maximize the transaction. And that's how it runs. The first 5 minutes. Okay. What else we want to say in this? We can see that, you know, do not, yeah, move stop loss or take early profit to stay with the trade because it's gonna move all the way down. Well, what I want to say, I think it run out. I want to say something more, but let's go for it right now. Okay. Oh yeah, where our stop loss? Well, if we identify high time frame, this level, then our stop loss is at this level. Yeah, that's the thing we need to. We can say that stop loss is, you can say 5 cents above the high time frame. High time frame. Is that a bullish breaker, right? Yeah, high time frame bullish breaker. Breaker. Okay. In this case, called breaker. Either bullish or break or bearish. Okay, I think that's enough. Good enough for now. Yeah, I think that's the only trade that we miss, and it's play out so beautiful, right? Yeah. And the target for this trade will be the 4-hour time frame. Or 4-hour time frame. You see our target at least right here. The long wick right there. We know that Whenever we see that, we know it's gonna, and it coming down, definitely it take the sell side right there. That's the target. Anyway, that's it for now. Thank you. We all go over the time, 10 minutes. Next time I'll keep it exactly 30 minutes. Bye for now.